Hey, what's up, YouTube? Today I want to talk to you about what does it take to be a successful investor. Okay, I mean, I've been doing investing since I was 23, and I know some of you guys are even younger than that. I'm a little bit old now, but I've been doing it for a couple of years, and I've learned a lot of hard ways, lessons that cost me not only money, it cost me time, it cost me emotional energy, because it does impact you when you lose. You feel like you're failing, and it's very hard to overcome that if you don't have the drive to actually keep on going. And I really want to take the time today to give you a couple of key lessons that I learned that hopefully will prevent you or minimize the losses compared to my losses. I mean, talk about the stock market. When I first started, I started off with $3,000, and I lost half of that, and it was very, very discouraging to me because, again, $3,000 for me, I think for a lot of people, is a lot of money. And when I first started, I saved all of that money from just working for someone, and to have it be lost like that, it was very discouraging. And now, for those that follow my portfolio, would know that I'm in the six figures right now, standing. So, but that doesn't happen overnight. So the key to having successful experience in investing, number one, do your own research. You'd be surprised how many people, including myself, when I first started, would follow these kind of so-claimed gurus, and also go on a post and read what other people are invested in without doing any research. And that's the number one common mistake with a lot of people. What they tend to do is, again, I've done that myself, and it was awful because I'm just going by the hype. I'm going off with somebody that I don't even know, that I don't even know how they're doing it financially. And even if they're doing financially well, it's not even enough of a factor. Because let's just say you were lucky enough to find the right guru out there that makes millions of dollars in the stock market, which, by the way, without financial gain, why would they even show you how to do it, right? Like, yeah, you can help people out, but they're probably selling you a course, or they have to sign a Discord, or you're helping out in a Patreon, which is fine because, again, if you're getting value, that's fine. But end of the day, like, nobody's going to try to show you for free. Just get that in mind, okay? Like, I can show you what I do as an investor, so I can help you out, but in return, I would want you to subscribe and like the video if you find there's value to it. And I think that's something that it's a mutual gain from both sides, because it's a value added, right? So, and the fact of the matter is, you got to always do your own research, because, let's just say you find the right stock. Don't put all your money into one basket, right? Like, or I guess in one stock. So don't put all your eggs into one basket. That's what I was trying to say. So why is that important? Because you got to diversify. Like, I've picked probably about 14, 15 stocks right now in my current portfolio, and I would say 3 out of these are not making money. Well, what if I just picked that one stock and I put all my money into it, and now it's not making money? I'm losing money. And listen, this is all investment. So investment, you're going to make money and you're going to lose money, okay? So you don't want to lose the money, because you can make gains, like crazy gains, right? Or you can lose a lot of money. So a perfect example is the most recent thing is GameStop. You guys have heard about it probably, the stock market and GameStop, the short squeeze. And the thing is, end of the day, for me, with all the respect to anybody that buy into the GameStop, whether you've gained or you've lost, for me, that's gambling. That's not an investment. It's just a hype. It's a hype. Yeah, I get it. A lot of people are standing their grounds right now against hedge funds and all that stuff. I understand the concept. You got to also watch out, though, because when you overhype it like that, right? When you put banners on the highway encouraging people to buy into a stock that, in honest opinion, has absolutely no value at all. It's just gambling. You're just putting money in your gambling. Hey, if it works out, it works out. I'll be a millionaire, or I'll make 100,000, 200,000. But if you don't, what happens? You're going to lose a lot of money. And what happens right now, sure, we can argue with the fact that, the government has manipulated the market, and I agree with that. But here's what happened. A lot of people bought in when the peak of the height of GameStop, thinking it's going to continue on going up because of the hype. right? Because we all know that stock is not worth that much money. And they lost. Imagine buying into GameStop for $300 and now it's like what, $80, $70? You lost. So you want to avoid doing that, okay? When you first start, if you want to take risk, higher risk, and you have the money for it and you have the capital, by all means. But when you first start, avoid hypes. Do your own research. Don't put all your money into one basket. Diversify. It's extremely important, okay? And last but not least, don't get discouraged, okay? It's a learning curve. It's a learning curve. Remember that. Don't let anybody else tell you that you're a failure, you're not going to make it. Okay, even if you start with $100, guess what? You're starting with $100? That's somebody that didn't start at all. Okay? So keep that in mind. Don't be discouraged. Don't be discouraged at all. I hope you guys like this video. If you do, please do me a favor. Like and subscribe for more content. And I'll see you guys later. Take care. You have a